been an absolute honor to be here, and I always like sharing and enjoying time with you guys. So today we're going to be discussing some trades and gaps. As Dan mentioned, really specifically today is going to be about day trading and the two types of gaps that I look for day trading profitability. The good news is if you're a day trader or a swing trader, you'll benefit from today's discussion, because what we're going to talk about most in detail are simply gaps. And a lot of traders talk about gaps. A lot of people focus on gaps. My, I guess, mission, job, focus is to explain the why behind gaps. A lot of traders use gaps. A lot of people focus on how they move, how the trades work, strategies, all that kind of good stuff. I'm here to focus on the why, to focus on the psychology, focus on who's losing money, who's making money, are they trapped, are they upset, are they scared, because that will provide us trading opportunities. What's most interesting is the emotions that gaps create. That is what we are really trading when we're trading gaps, or really when we're trading the stock market. We're trading and we're focusing on people's emotions, regardless if it's a good emotion, if they're exuberant, or if they're really, really scared. There are two types of gaps out there in the world. We have a gap up and we have a gap down. Done. Now, those are the two that I'm going to be talking about today. Obviously, that's kind of no-brainer, right? Stocks can either gap up or they can gap down. I'm going to talk about two gaps in particular today, and that gap, those gaps are what I refer to personally as the bearish, so that's the best way I can spell, bearish gap and go, and the bearish, let's do the bullish gap and go. Bullish gap and go. So you have the bearish gap and go and the bullish gap and go. And as you can probably decipher, the bearish gap is going to be when the stocks gap down, and the bullish gap is going to be when the stock gaps up. And of course, I'll kind of be talking a little bit about the sentiment for both swing trading and day trading. So just kind of throwing that out there. So that's kind of what I got. All right. Let's talk about the SPY for just a moment. We're going to discuss the bearish gap and go and the bullish gap and go. And again, kind of discuss the why behind the setup. So the bullish gap and go is when a stock gaps up and traps people. Trapping is a term that I use often when referring to people who are losing money. So let's look at this candle right here on the SPY. This candle is from the 29th of September. This candle is a black candle. Black candles, and I use black and white candles. You can use green and red. Really, the colors don't matter. But let's just call this a bearish candle. I'm going to go ahead and ask a question to the audience. How are bearish candles created? It sounds like a trick question, and it's actually kind of an easy answer. But it's one of those things that you might not know it until you know it. How are bearish candles created? What do you guys think? Man, a lot of people here. Jeffrey, how's it going? Jeffrey, Paul Hope in the house. What's going on? TD, Sam, very nice. I have first name, last name. First name, last name says sellers. TD says selling. Yes, beautiful. That's exactly how bearish candles are created. Bearish candles are created from people selling. So remember, there are two sides to every trade, right? As Carol mentioned, we have people who are selling. Those people could be selling to open. Selling to open. Selling to open, as most of you here know, is a bearish position. What that really means is someone is getting in bearish, anticipating for the stock to go lower. So they're selling to open. Hedge funds can do it. Retail traders can do it. A lot of people can do that. So bearish candles are created from selling pressure, and specifically when the close of the day is lower than the open of the day. So how does that bring us to gaps? What does this mean related to gaps, and how is this important to our trading as day traders or swing traders? Well, imagine with me for a moment that you are a bearish trader on that day, which is September 29th, 2015. You were bearish, Carol. I'm going to use Carol as an example. Carol, is that cool? Miss Ferris? I'm going to pick on you. So TD asks a good question. He goes, why is it not just selling to close? It can be selling to close as well. So it's just selling. It's mostly people selling. But absolutely, it's going to be some selling to open as well. Right? Selling to close, that can be, and it can happen, but it's also going to be selling to open. So it's going to be a little bit of a bearish trade. So I'm going to say that, Carol, I'm actually going to do two situations. I'm going to talk about both of them. And TD, I promise this question will be answered in both ways. So let's say Carol did this. Let's say that she bought some shares up here, and she sold to close some shares down there. So she sold at a loss. Right? Trade was going down. She sold at a loss, so she sold to close. And so she said to herself, man, I'm selling to close. I'm up, you know, I'm getting out of the trade. I'm now going to sell to open. Now I'm going to get in bearish. So she sells to close her long position at a loss, and she sells to open, hoping that the bearish trade continues. Right? The bearish trade continues. She makes money. Everyone is happy. So we have a bearish candle, and the next day, the stock gaps up. The next day, the stock gaps up. What happens to everyone who sold to open? Any bearish traders, so Carol and Sam and TD and everyone else, what happens for those who sold to open? Andrew, what do you think? Aubrey Johnson? John Haywood's got it. Bill Halpin, what about you? Brad, is it Brad Cowgill? Is that how you pronounce your last name? It's cool. Buck Duggan's in the house. What's going on, Buck? Carol says, I lost. Yeah, you're losing money. You're down. People don't like losing money. And not only that, not only are you losing money, but it happens so quickly and drastically that it's kind of like, what's going on? What's happening? Right? Stock, you were in bearish, and then it just randomly gaps up big the next day. Type in a 1 if that's ever happened to you. I mean, it's happened to me. I'm going to type in a 1 because this absolutely happened to me without question. It's happened to me. Jeffrey says plenty. Yeah. So you get into a trade bearish, and the next day, boom, the stock gaps up strongly. What do bearish traders do in this situation, ladies and gentlemen? Specifically, how do they exit their now losing bearish position? Sam's got it. Bill, very nice. Pam's got it. What's up, Pam? How are you? Lewis in the house. What's up, Dr. Wall Street? TD got it. Yes, beautiful. So they buy to close. They buy to close. That's how they exit their position. So if a bearish trader is in a bearish position and they're going to exit that position, doesn't matter if it's for a profit or for a loss, they are buying to close. That buying pressure is going to cause other buyers to hop on board. So you have buying pressure, and if all the bearish traders are buying, then you would think that you should be buying too, right? So let's take it back into hindsight. Let's kind of reverse back over here, and let's just say now, let's kind of bring in another piece of the puzzle. So this 187.90 is a support price on the SPY, in my opinion. And the reason I think that is because SPY, this is the place that it bounced back on the flash crash back in August, and then we traded back down there to September. So when this black candle gapped up, all of the bearish traders who were selling to open, they were forced to buy to close and take their loss. So if you can recognize on the chart that bearish traders are having to buy to close to exit a position, should you be buying with them? And my thought is, yeah, absolutely. If you can see what a lot of people are doing, do it with them. The added piece of this puzzle, the sprinkles on the cake, if you will, is that this also occurred at a support level, the 187.90. Now the question that most of you are asking is, all right, Jeremy, this is all cool and everything, but where would you get into the trade? Where would you get into the trade? That's how you make money, right? That's how you make money. Well, I'm going to get to that. So stick around. That's coming. I'm going to talk about the bearish gap and go trade first. So this is one that most of you will be very, very familiar with. I kind of start out with the bullish gap and go first because a lot of traders are not super familiar with shorting and then buying to cover. And so I kind of like to break that barrier down and then present them with something that they are super familiar with. So someone give me a stock, any stock, and I'm going to go try to find a bearish gap and go on that stock. It can be anything. First person typed in was Google, ticker symbol GOOG. All right, so what I'm going to do is I'm going to go ahead and try to find a bearish gap and go on Google. While we're here, though, I'm going to look for one. But while we're here, can anyone tell me what type of gap that is right there on the 10th of July, 2015? Yeah, it's the one we just talked about. It's the one we just discussed. Absolutely, it's a bullish gap and go. We just talked about it. Is it also occurring at a support or near a support? Yes or no? And the answer is yeah. Pretty sweet. So we already learned something we just talked about. Bullish gap and go, and now we can just see it on the first stock that we looked at. All right, so what I'm looking for right now is a bearish gap and go. I found one, but I'm trying to find another pretty decent example. This example will work, but it's not perfect. But this is Google with a G, so I can't go back as far as I can go with Google with an L because that was the offshoot, if you will. So let's talk about this gap. This gap right here is good. This one will work because this is absolutely a great gap for day trades. So I'm going to zoom in here for just a little bit, and I'm going to point to the candle that I'm looking at right there. Boom, there it is. Okay, so let's talk about the bearish gap and go. Bearish gap and go. So notice this candle is a white candle. Okay. We have a white candle and the stock gaps down. How do we know if there were buyers in the candle that I circled in blue? How do we know if there was more, what kind of pressure was built from that candle? Well, the answer is it's a bullish candle. So if it's a bullish candle, if it's a white candle, we know that there was more buying pressure than selling pressure. It doesn't necessarily mean that there were more buyers than sellers. It just means that there was more buying pressure than selling pressure. So when you're asking the question, you're going to really think about, did people buy there? Do we know for 100% certainty that someone in the world, let's call that person Dave. Let's say that Dave bought there. Do we know, can we have 100% confirmation that someone in the world bought Google on that day? And my answer would be, hands down, without question, yes. Someone in the world bought there because the candle is white. It is a bullish candle. Now, how do you think Dave is feeling on the next day? How's Dave feeling the next day? So he bought in bullish, and the next day the stock is gapping down. Mr. Ronkin says he's scared. TD says he's dead. John Haywood says he's sick. Yeah, he's upset. Dave is losing money. So Dave is likely going to react emotionally. He is sad. He is worried. He is upset. David said, I'm feeling terrible. Yeah, exactly. So he's worried. Okay? So is he losing money the next day? Absolutely. Let's say, again, Dave bought on that day. Ladies and gentlemen, where do you think he would have placed his stop more than likely? Where would he have placed his stop more than likely? Well, probably right here. Probably right there. Right below that candle's low. So the fact that the stock is gapping down, and here's the keyword, ladies and gentlemen, opening. So it's gapping down and opening below the low of those candles. Dave is what I refer to as trapped. And what trapped means is the stock gaps down and gaps into his stop the very next day. It's trapping people. The stock is going below the support. Some of you will refer to or hear the term pivot. So pivot and support often are very simultaneously used. Pivot and support. So this is the support level right here, based from this giant lower wick candle. Right, this is a very bullish candle. This candle on GOOG, the one that occurred on the 18th of July. Very, very strong bullish candle. Stock trades up, and then nice little white candle, then the stock opens below that low. So everyone is trapped. They're losing money. So you guys all know this one. If you are buying stock, how do you exit if the trade is going against you? You sell. Right? You sell to close. You get out of the trade. So if you can look at a chart and say, man, everyone is selling on this stock. Everyone is selling because they're trapped. Would that give you the ability or the knowledge or the foresight or at least the understanding that if people are trapped and they're selling, then you too could also sell with them? What do you guys think? Yes or no? I contend that it's a big yes. Edith says, poor, poor Dave. Yeah, poor, poor Dave. But it happens all the time. And sometimes it can be a bank or a mutual fund or a hedge fund, so maybe they don't care. Maybe they're just buying more, right? They got billions of dollars more than we have, so it doesn't really matter. But the truth of the matter is, yes, absolutely, people are going to lose on some trades. It can happen, and it has happened to all of us before. Every one of us here has lost money on some trades. But if you're day trading and or swing trading, but specifically day trading, you're going to be mostly in cash day to day. So Monday to Tuesday, Tuesday to Wednesday, Wednesday to Thursday, you're going to be mostly in cash. So if you can go and see those opportunities and see if people are trapped, are losing money, and you can trade with the crowd, that's what helps make you money in day trading. So again, I'm going to point to another example on Google. What type of gap is that, ladies and gentlemen? Black candle, stock gaps up. So the one we just talked about a little bit ago, that is a bullish gap and go. Yep, absolutely. Great job, guys. Bullish gap and go. Now, keep in mind, the names of the gap doesn't really mean anything. We could call these gaps anything. In fact, there are literally thousands of instructors around the internet, around the world, who trade gaps, and there are thousands of different names to the gaps. The names are not the most important part, in my opinion. What's important is the why. Understanding why that gap is bullish is the key to trading successfully. Understanding the why, because you got to realize there are people trading the stock, and people react emotionally. So if you can understand what people are feeling emotionally and go with the majority of those people, all right, if everyone's trapped, if the bears are losing money and the bulls are buying and they're buying to cover and they're buying to open, then you too should be buying. That's going to help. What about this gap? Same thing. Pretty cool stuff. Pretty cool stuff. And again, you can see that that would have been a great day trading opportunity and or a swing trading opportunity as well. And then notice where the stock traded up into. Trade up into the exact same resistance that it sold off before. And then what do we get? A white candle gapping down. This particular candlestick pattern I refer to as a one black crow. Most of you guys are familiar with that. And that was a great trade setup on Google. So let's go to present day GOOG, because present day we can learn more information than we can from back in the day. So here's present day Google. Right there, obviously, again, another strong bullish gap and go that occurred on September 30th. We had another type of gap I refer to as a retest gap right there. And now this is present day Google. So present day Google, I'm not saying this is going to happen. But let's say, as an example or a possibility, Google opens right here tomorrow. What type of gap would that be? What type of gap would that be? That would be bearish. Nicely done. Very good. Yeah, that would be bearish. Why? Why? Why would it be bearish? Because that's what I'm here to teach today. Why would it be bearish? Well, it'd be bearish because people are trapped. People are losing money. Specifically, anyone who is buying today, because today is a big white candle, and of course, anyone who bought on that candle, and anyone who bought on that candle. Stock will be gapping down below support, gapping down below pivots, and gapping down below where people likely have their stops. Therefore, they would be trapped. Type in a 1 if that makes sense. While you guys are doing that, I have a trader. I don't know the name. It just says first name, last name. It says total novice here. What about the term fading a gap? Absolutely, that's a very good question. Fading a gap means you are taking the gap in the opposite direction of the opposite direction of what it did. So, for example, on Google, I'll talk about this just really quickly. White candle gapped up. So anyone who bought on that day, first name, last name, who asked that question, how would they exit the trade for a profit? They would sell. Right? White candle gapping up. Buyers are going to be sellers. So that would have been a fading opportunity on Google that day. A fade is when you trade a stock in the opposite direction of the gap. So the stock gapped up, you would have looked for a trade down. Okay, so that's fading. We're not going to be talking about that here today, but fading is definitely absolutely an opportunity out there in the markets. Another trader by the first name, last name pseudonym says, if you have an opening gap, when would you stop trading it? Is there an amount of time that passes that you won't trade the gap? It's a good question. It depends on the stock and really the type of trade that I'm doing. If I'm doing a day trade or I'm looking to day trade it, probably 1 to 3 days. If it doesn't do what I want it to do in 1 to 3 days, then I'll probably stop following it. As a swing trade, after the third day, you have a lot of data on the screen, so you could probably trade it after the third day. And maybe after 2 or 3 months go by, I'm not as concerned about that gap. Hopefully that kind of answers your question. Another trader by the name, first name, last name, says gaps occur because of overnight price action. Yep, that is correct. Absolutely. All right, someone throw another stock my way. Any stock. Let's go look for some of these gaps. And we're just going to practice these for a few more minutes, and then I'm going to talk about how we're going to day trade these guys, right? Because I got to lay the foundation of what the gaps mean, and you'll see some really, really good opportunities today in a few stocks. Apple's too easy. Let's go look at Priceline. Apple's too easy. They're everywhere on Apple. Let's go here. See. First name, last name. So I guess the time of day of buying is important in relation to the fading of the gap question before. Correct. Would the gap and go be a swing trading, not day trading strategy? It's both, right? Today, specifically, the webinar, we're talking about day trading. So I'm just kind of giving you guys the look of the gaps, and we're going to be talking about how to day trade them in just a little bit. All right, so here's Priceline, and what I'm going to do on Priceline is I'm just going to go look and find the setup. The last time I looked at Priceline was here on this little purple circle, and I thought it was an island reversal, which is a chart pattern, and it turned out that it was. Let me go try to find a bullish gap and go and a bearish gap and go for an example, and then we're going to use some present day data and look for some day traders on these. Okay, so this is a bullish gap and go right here. This is a bullish gap and go right there, and we have another bullish gap and go right here. So black candles gapping up. I can't find any strong white candles gapping down, at least right at this moment on price line. Yeah, I don't see any strong bearish gap and goes. That makes sense because the stock was pretty bullish. So well, let's discuss price line at the moment. So price line, again, based on my charts, I have a little bit of a support at 1197, so 1200. So at this particular point in time, let's talk about this because we can, again, this is what day traders do, is even though day trading happens during the day, the best day traders plan for the future. Yeah, we plan for the future. We figure out what do we want a stock to do, and then if it happens, we do that. So we have a white candle on price line at a support level. Can price line bounce from here? Absolutely. Probably will. Probably will. I'm not entirely sure. I'm just saying it might. But let's say, for example, price line opens tomorrow, which I'm not saying it will. Let's just say it does. Let's say price line opens at 1170 tomorrow. Ladies and gentlemen, what type of gap would that be? That would be a bearish gap and go. Yes, nicely done, Steve Bright. Very good. Carol Ferris, nice. You guys are getting the hang of this. Right on. So you can see why it would be bearish, right? You have a white candle. You know people are buying here today. We can guarantee 100% certain that someone in the world is buying on price line today because there's a white candle or there's a bullish candle. So we know someone's buying. Now you piece the facts together that we're also at a support, and we can say for sure that someone's buying there. How do you know it's a support? Ladies and gentlemen, this is the exact same price that it bounced back in October and August, September area. So we know someone's buying down here. And that's what day traders look for. Day traders are looking for people who are trapped and are losing money. I have another trader saying, bigger the white candle, the better. Yes, the bigger the white candle, I guess the question is the better the what? What are you looking for? The bigger the white candle, the more bulls that are in the house, the more buyers in the house, and the better the buying signal. Absolutely. So if you have a huge white candle, and then the next day it gaps down, you have even more people trapped. Absolutely. Yep. You have even more people trapped. Another trader says gap and goes are kicker signals. Yes, that's another term out there. It's a kicker. Again, like I mentioned, there are literally thousands of names for the gaps out there. My objective here today is just to teach you guys the why. Because if you don't understand the why, it's powerful. Can this work on futures? Yep, it can work on futures. It can. They don't gap as much as equities do, but it can. So let's look at some present day stuff. Let's talk about some day trading right now. And I'm going to hop over to one of my favorite gaps on the day. Ticker symbol ORLY, O'Reilly Automotive. O'Reilly. Ladies and gentlemen, type in a 2 if you can see the bearish gap and go that occurred today. Give me some 2s. All right, got 1, 2 coming in. Got a few more 2s coming in. Beautiful. Beautiful, beautiful. This, ladies and gentlemen, was a phenomenal gap on O'Reilly. Let's talk about the why. Let's talk about the why. First of all, you had a 2-day pennant pattern. Don't know if you guys know a lot about pennant patterns or not, but regardless, we can talk about it just from the candle perspective. Okay? Yesterday was a white candle and we gapped down. That's number one awesome thing about this gap. Number two, if you bought yesterday, and we know someone did because it's a white candle, it's a bullish candle, so we know, Gary, that someone bought here yesterday. Where would they have placed their stop, Larry Jones? Where would they have placed their stop? More than likely, they would have placed it right there, right below the previous candle's low. Probably. So, anyone who bought yesterday was likely trapped. All right, they're losing money. Their stops are getting hit, they're trapped, they're upset, they're scared, they're worried, all that kind of good stuff. Pretty interesting, huh? Pretty interesting. Right on. So how will we day trade this today then? Oh, now we're getting to the good point. Now we're getting to the good stuff. So if we're day trading, we're looking for the gaps. We're looking for gaps. We're looking for people trapped. We are looking for opportunities to trade the markets in the direction of the fear, if you will. Good traders, you probably all heard this term, they trade with an edge. An edge just simply means you have stacked the probabilities as high as you can in your favor. So you stack the probability as high as you possibly can. So what I'm going to go is I'm going to pull up some intraday charts. This is the 5-minute chart, and I will talk about two strategies that you could have used here on O'Reilly. Both of them I implement often. So the first strategy is when a stock gaps down, right? So we're dealing with a bearish gap and go. Stock gaps down and it forms a white candle in the first 5 minutes. So a strong bearish gap and go, one that's clearing the pivots, one that's clearing support, stock gaps down, and we have a nice white candle. Okay? So that's the first thing that we have. That is a nice way to have it. So again, bearish gap and go, candle gaps down, you get a white candle in the 5-minute, you take it below the low of the 5-minute candle, and you place your stop above the high. Now what I'm going to do today is sprinkle in a little bit of something extra, something that most people, most traders don't really talk about. They talk about the strategies, they talk about the why. I'm also going to dabble in some risk mitigation because I always do that in everything that I teach, because risk mitigation is key. That's what prevents you guys from blowing out your accounts. That's what helps you trade longer. Risk mitigation is key. So what I refer to, I do something called the R strategy. Most professional day traders use this. Those that don't should. And the R strategy is just simply a risk unit. This is how much money you're willing to risk on every single given trade. So a risk unit is the amount of money that you're willing to take on a trade. So let's say, for example, on this trade, your risk unit was $100, meaning you're risking 1 R. Because a lot of traders out there, and the reason that risk units are important is because they will buy the same amount of shares every time, thinking that that's consistent risk when it's not. If you buy 1,000 shares of Apple and 1,000 shares of silver, those are two different risk profiles. How many times have you one small, 4 nice little wins in a row, and then you have one big loss that wipes all of the wins out and then some? It used to happen to me all the time. The understanding of risk is the risk was more on this trade than it should have been. Right? You risk more than you should have. So you have 4 small losses and 1 big loss. Or I'm sorry, it's 4 small gains and 1 big loss, and now you're losing money when really you should be winning at that point. So keep your risk the exact same. Keep your risk the same on every single trade, and this is how you do it. This number is usually calculated by 1 or 2% of your portfolio size. 1 to 2%. So $100 R is a little bit of a smaller account. Okay. A little bit of a smaller account, about $5,000 account would have a $100 risk unit. $100 would be a $5,000 account. So let's talk about how many shares you could have shorted on this trade. So your entry, right, bearish gap and go, stock is trapping people, 5-minute bullish candle, take the low of the break of that candle. So your entry was 243.17, stop 244.63. So you find the difference between these two numbers, 244.63 and 243.17. That comes up with $1.46. From here, simply divide 100 by $1.46 and you'll come up with how many shares you should or could short on this trade. That would be 68 shares. $68 shares. And there you go. So if you short 68 shares, some of you would say, I don't really know how many to short. So you just go with kind of your mental judgment. I'll short 100, I'll short 50, I'll short 1,000, I'll short 312. You don't really know on every given trade. The best way to know on every given trade is to be able to calculate your risk. Have your risk as a certain figure that does not change until you're profitable, and you can be a 50-50 trader and make money. One trader says, so that would translate to a 68 delta put. Nope. Not necessarily. If you're shorting, if it says to short 68 shares, how many contracts is that? One trader says, how do you calculate that for futures? I'm not sure. I don't personally trade futures. I'm not entirely sure. Yeah, so 68 shares would be almost one contract. So if you're day trading a contract, that would be one put option. One put. One put or 68 shares, that's how you keep your risk at $100. Right? Keep risk consistent. Because again, if you're a 50-50 trader, let's say you make $200, $200, and you lose 100, and you lose 100. How much money are you up? Well, you're up $200. This is called R trading. So the terminology is you risk 1 R to get 2, 3, or 4, or of course the more the merrier. So you're going out there and you're looking for good risk-reward trades. Risk 100 to make 300. And you do that consistently, all the time, every day, every week. So another trading opportunity on O'Reilly. Let's say that you're an afternoon trader, you like to sleep in, or you have to go to work, and you open your charts, and you're looking to day trade O'Reilly, and you see that the stock is traded down, it's traded back up to the resistance level, and you're getting some reversal candles at the resistance on O'Reilly. Let's do another example. Let's bring the trade up to here, and let's say that you took this particular setup right here. So you waited for a break of the low of this candle, which is a bullish candle. This would have been a target 1 right here, right? The previous low of the day, that's one target, where normally you would take a little bit of profit off the table. Let's say you just took half of your position. So let's practice this really quick, ladies and gentlemen. Let's practice this with a $100 R. A $100 R. How many shares would you short in that situation? I know you're probably like, man, I got to do math? Yeah, let's practice it. If you have a $100 R, right, that's your risk. That's your 1 R of risk. How would it work? How many shares would you short in that example? All right, you guys are coming up with the calculation. So I'll go ahead and help you out. So we have a $100 R. So 244 is the stop, right? That's the high of the day, or the recent resistance. I'm sure all of you guys are familiar with that. And your entry, 243.59. So this is 86 cents. 86 cents. So you would divide $100 divided by 86 cents, and you have 116 shares. 116 shares. Now, one of the traders out there, I don't know the name, it's one of the first name, last name pseudonyms, but they came up with a very, very good point. Said, I can't short that many shares with a $5,000 account. That is correct. That is correct. So I'm happy to share 2 links with you guys really quick. I have an ebook, it's a free ebook called Retire on 3K. I talk about how you can trade through a hedge fund and you receive the funds through the hedge fund to day trade with after passing a test that I created. So you can check out that ebook, just put it in the chat pane. So if you don't have the money, obviously you do one of 2 things. Either get the money, because you can always get the money to trade with, just got to know how, or you can buy an option. I'm going to send a YouTube video out there really quick as well. Give me 1 second. If you type in day trading with weekly options, let me do that really for you guys really quick on YouTube. Day trading weekly options. I'm one of the first videos that come up. And I will send that to you guys now in the link as well. And I talk about this strategy, and I talk about everything. If you're going to day trade weekly options, like what option would you buy? In this situation, it depends on how the strike prices would be set up. But if you had 116 shares, you would buy either 1 or 2 weekly put options, probably a 245 or a 242.50. Again, depending on how O'Reilly has their weekly options set up. I don't day trade weekly options on stocks like O'Reilly. I just trade the stocks. I do day trade weekly options on Apple, Amazon, Google, Netflix, but I talk about that in the video that's in your chat pane. And again, me and Dan will provide you with some more information here momentarily, how you can contact me after the webinar if you want any additional information. But regardless, again, you can short 116 shares. That means you have a locked-in $100 risk. If you do the options, you can do that as well. You would take, of the 116, let's say you take 60 shares off at the bottom by buying to close, and then from there just trail your stop. So you probably honestly would have just gotten trailed out on O'Reilly back here at 240.09. 240.09. So this would have been approximately 2.6, 2.67 R's on the day. It would have been a pretty solid trade. And that, ladies and gentlemen, is day trading. So let me post the links for you one more time. This is just the YouTube video. It's on YouTube. That is the Day Trading with Weekly Options YouTube page. And then I will also post the ebook. It's a free ebook about how to day trade with $3,000. It's called Retire on 3K, and it really is quite an eye-opener. I'll put that in there too. There you guys go. I'm all about content. I love educating. I just like to teach people. So thanks, Dan. I appreciate that, man. Thank you, thank you. So that's the day trading strategy. That's really about it. It's pretty simple. Find a good gap and trade it in the direction of the trend. Have a good risk profile, right? 1 R of risk, and go from there. So we can look at, a lot of stocks gapped down today. Many stocks gapped down today. The key was finding a white candle that gapped down. If we hop over here to SPY, I'm actually relatively bearish on the SPY, folks, as of today, in case you guys are wondering. We had a white candle on Monday, and we opened below the low of that candle. on the SPY. So if you hop over here to a 5-minute chart, notice the exact strategy that I just mentioned. I said, right, keep your 5-minute chart, entry stop. Wouldn't have gotten triggered in on the SPY trade for that. But really, yesterday's candle wasn't a beautiful white candle. Yesterday's candle was actually a small black candle. But Monday's candle was a nice white candle. So the fact that we're gapping down and we're trapping anyone who bought Monday, which was me, right? I was a little trapped by this morning's gap. I think that that's a kind of a bearish signal. A little bit of a bearish signal, kind of anticipating the stock to do something like this and then probably honestly roll over. Target 1 for me on the SPY as of now is about 196, and we could make it all the way back down to 187. Not saying that's going to happen, but based on some of the recent gaps, I think it really could. Now, let's say SPY does get back down to 187. What should we do down there at that point then? Yeah, you'd buy some. I have one trader saying you can effectively trade $200 stocks on a $5,000 account, focus on cheaper stocks. Yep, you can do that. You can focus on cheaper stocks and or, of course, learn how to trade with other people's money. Either one. Chuck and Andre say go long there. Yeah, absolutely. So that's the plan for the future. The plan for the future is go long at 187.90 if the SPY makes it back down there, right? That's the future plan. The future plan. Cool. Right on. A few of you guys were asking about scanners. There are tons and tons and tons and tons of scanners out there, folks. Literally myriads of them. Your brokers probably have scanners. FinViz is a scanner. I mean, there's so many. This one is totally free. I'm not getting paid to endorse this at all. I don't have any partnership with Bar Chart whatsoever. If you guys want some free scanners, this list updates about 30 minutes after the market open. Okay, it is free for everyone. And if you want to use it, you definitely can. I do love using this for the afternoon. So the afternoon, I like using it, and you can go through and just really go through all of these stocks and find some really good gaps and see if you get a chance to trade them. So Microsoft was on that chart. So let's type in Microsoft really quick and see what Microsoft did. So Microsoft, ladies and gentlemen, this is a bearish gap on Microsoft. And we got that from that free scanner. Yes, as I mentioned, yes, this bar chart does only show 15 minutes after open. There's another scanner in the morning. It's also a free site. Again, I'm not endorsed to provide this link or this website. I just like giving you guys free stuff. So there it is. This is the pre-market mover. So notice this pre-market has the gaps down for AutoNation, which was also a really good gap, ctrip.com, a few others, and has some gap ups as well. So that's another free scanner, but there are really as many scanners out there as you could possibly want. And that shows pre-market open. But yes, this only updates 15 or 30 minutes after the market's open. But regardless, so let's go look at Microsoft really quick and see what we could do with Microsoft. So again, white candle gapping down. Now, here's a good question. Did Microsoft gap below a pivot or a support line? What do you guys think? Joel, what do you think about that? Kent? All right. A lot of you guys are saying no. Ah, you guys are good already. I like this. Nicely done. Nicely done. It did not. No. If you're thinking to yourself, you're scratching your head, you're saying, well, kind of, because this is a white candle and it did gap down, and anyone who bought yesterday is trapped and they're losing a little bit of money. I would concede to that. I would say yes, that is accurate. That is accurate. So my thought process then is if Microsoft opened below that support right there, would people be trapped? And again, I would say at that point, Yes. I would say they would. That's what the SPY did today. The SPY took out a pretty solid support. So guys, I'm a touch bearish going into the markets. One trader says, why do you pick that support? Well, let's just look at the price action. And let's just draw a support line. And you can notice that you have a wick from that candle right there. You have a wick from that candle right there. All lower wicks represent buying pressure. So if you draw a little level like that, you can see that the stock did and has clearly bounced off of that 3, 4, 5 times in recent past. So that's the most recent support level. Now, just to be devil's advocate, this is another support level for sure. And if Microsoft opened below that support level today, that would also be a very bearish move. So let's talk about this. So Tim asked, at what point do you consider the order a loss? Well, when it hits your stop. So here's the 5-minute trade set up on Microsoft. And again, bearish candle, stock gaps down. This would have been the setup. So I'm going to practice this really quickly for you guys. And let's say that was your entry right there on Microsoft. Okay. 20 cents of risk. $100 R, $100 divided by 0.20 equals how many shares? How many shares would you short in this situation? So remember, this is just taking the 5-minute low. 100 divided by 0.20 is 500 shares. Yep, 500 shares. How many contracts would that be? That would be 5 contracts or $27,000 in buying power. So yeah, you need a little bit of buying power for that trade. But if money is what you need, money is easy to find. People will give you money to trade with. That's not the issue. But Tim, let's answer your question and say, so you get triggered into this trade. Let's say that Microsoft did that. This is where I consider the trade a loss when it hits my stop. How much would we lose in that situation, ladies and gentlemen? 1 R. 1 risk unit. A controlled, predetermined value based on your account size is how much you lost if it hit your stop. Now notice this particular trade didn't go gangbusters. You might have broke even on this trade. Ladies and gentlemen, does that happen in day trading? All the time. All the time. In fact, today alone, we took one trade that did break even on Disney just a few hours ago in our trading room, which I'm going to give you the link to that in just a few seconds, by the way, so don't go anywhere. So that's something that is quite interesting on Disney. We broke even, right? That's going to happen all the time. Tim says, you didn't buy at the very open, you waited until the top was set. Correct. So as I mentioned just a few moments ago, if you find a good bearish gap and go, you wait for a 5-minute candle. If the 5-minute candle is white or bullish, that is a good sign. And then if that candle low gets taken out, then you get into the trade bearish. So let's say you didn't get into the trade because that candle wasn't white. The next candle was white. So the low of that candle was 54.20. So then you could have had an entry at 54.19, and your stop would be above the high of that candle. So you would have gotten triggered in 5, 10, 15, 20 minutes into market open on Microsoft. Does that help, Tim? So again, you wouldn't have made a lot of money on this trade. I'm not here to say you're going to win on every trade. That's not my thing. The name of my company is Real Life Trading, and I call it Real Life because I try to be as real life is. I approach trading in a very focused, very obvious, this is what happens, and if you want to make money, this is how it works kind of way. All right, sweet. So that's Microsoft. We can go through this gap down list and look for some more. There weren't any bullish gap and goes today, so I don't really look at any of those. There's no examples. Let's go look at Southwestern Energy. I think that was I don't think that was a bearish gap and go, but we can still practice it just like it was. Yeah, not really, no. Wasn't quite a bearish gap and go, but let's just practice it and pretend that it was. So again, white candle, you'd be looking for a white candle stock gapping down. I'm sure I can find an example in the past where you had one. Nope, doesn't appear so. So here's the 5 minutes, and again, this is just one of many examples or strategies that I use. But again, if you wanted to wait for a break of the low, it did gap down. There's your 5 minute low, entry, stop. It would have triggered about an hour into market open. And obviously you can see that trade would have worked out just fine. Here's Boeing, ticker symbol BA. Boeing on the daily charts. Boeing, yes, Boeing was and is a gap and go. So you have it's a smaller white candle. So remember when I mentioned earlier or another trader asked, is the bigger white candle better? Yes, the more people trapped, the better. Dave says, can you trade these with options? Yes, you can. Here is my thoughts on day trading options. Made a nice little video for it. There you go, Dave. So Boeing, here's the 5 minute chart, and actually it kind of looks like a decent trade right about now. You guys might remember I mentioned that I was going to do a live trade in the room today. So this is how I would play Boeing. We have an hour and 15 minutes left into the market. And notice this little support right here. Let's go ahead and practice this on Boeing. And if we were to go bearish, ladies and gentlemen, and let's say we had a $100 R, how many shares would we short now? I mean, the market is open. Rich says, so do you handle a gap and go different than a retest for day trades? Yes, sir. Absolutely. So 49 cents of risk. So 100 divided by 49 cents. $100 divided by 49 cents is 204 shares. How many contracts would that be, Dave? Prop shop only. By the way, Jeremy, options on stock also have pattern day rules will apply to them. Only if you have a margin account. So I have one trader saying, by the way, Jeremy, options on stocks also have pattern day trading rule applied to them. Just got toasted myself by Interactive Brokers, and account is pattern day trading rule flagged. Pro shop only. I'm with you. I don't personally like trading with less than $25,000 if I'm day trading, but that is only in a margin account. If you have a cash account, you can day trade options every day until your option buying power is gone. If you want to learn how to trade other people's money, I just sent you a link for the hedge fund trading information that I have. Yeah, so just throwing that out there. So you probably have a margin account. All right, cool. So that trade would have just triggered just now on Boeing. So let's talk about, again, the risk, because that's the most important aspect of it, right? This is 1 hour of risk. So where would our target be? Well, the target would probably be about the low of the day, right about here. So if this is 1 hour of risk, ladies and gentlemen, is our risk less than our potential reward? And the answer is, of course, yes. Yep. So we can see if this trade works. There we go. Ladies and gentlemen, that has been 60 minutes of education. I love it. Fantastic energy. You guys asked some amazing questions. Thank you so much for being here. What other questions do you guys have for me at the moment? We'll open up the floor to any kind of questions that you may have. I have one trader asking, what about a bullish gap and go? I couldn't find any bullish gap and goes today. I didn't place actually even one today, but I have a screenshot example for you. I'll bring this over here. Here's a screenshot example of a bullish gap and go. And this was on Honeywell, and I will pull up that daily chart in just a second. So it's going to be a little hard to see. It's a little blurry. In fact, I'll just go back over here. I don't really have the ability to send you guys a screenshot via, but here it was. Give me just a few moments. Come back in here, and I'll show you Honeywell, where that trade goes from a few days ago. Honeywell. All right. So Honeywell back on the 16th of December. So the 16th of December, you can see that you had a nice white candle at the open. Could have gone bullish there with a stop there. Also had a nice little triangle pennant pattern. Could have gone bullish there with a stop there. Or that was my trade setup on Honeywell, 102.84 by 102.44 on that day. And that trade also continued up nicely. Let me show you that bullish gap and go on the daily chart. And here you go. So notice on Honeywell, you had some black candles, and the stock gapped up and opened above all those candles, trapping people. So that is a really, really strong bullish gap and go. Rich says, so what is a retesting gap? Retesting gap, Rich, I really truly don't have time to teach you as firmly as I would like to right now on retesting gaps, because I do two types of gaps: bearish gap and go, bullish gap and go, and bearish retest and bullish retest. You can do this though. Go to YouTube, everybody, if you ever get a chance to. We have a lot of content on YouTube. Real life trading, the most important video you'll watch about gaps, something like that. I forget what I titled it. Boom. The most important video you'll watch about gaps. And this gap, this video goes through all 4 gaps. I'm also going to have an ebook about that soon, Rich. So go to YouTube, subscribe to our YouTube channel. We have tons and tons and tons of videos. And ladies and gentlemen, they're all for free, and they're fantastic. Sophie has a really good question. Sophie says, how does your trading room work? All right, Sophie, get to the point. I love it. Let's talk a little bit about that. So we do have a trading room, and here's the best news that you guys got all day, potentially, maybe. I don't know what news you guys got all day, but here's some news. We have an open house this week. The reason I say that's good news is because we never have these, and by never, I mean about twice a year. It's very, very rare that we have an open house. You do have access to get into that this week only, entirely for free. Entirely for free. I'm going to send that link right now. That's the morning trading room. It is from 9 a.m. to 2 p.m. Eastern Standard Time, Monday through Friday. If you're watching this, there is a recording. If it's next week, you're going to be a little bit late. But you can always email me, jeremy@reallifetrading.com. That's my email address, Jeremy with 2 R's. We also have an afternoon swing trading class for anyone who works in the day or is more of a swing trader rather than a day trader. I will post the swing trading room link as well. This is all in your chat pane. And, of course, Dan will be sending out links with emails. You can contact me or Dan anytime for any of this information. But I will post that. The afternoon class is Monday through Friday, 5 to 6 Eastern, and we do record that class and email it to all of our subscribers. Wayne says, do you have a trading room? I do, yes, Wayne. Yep, and it's pretty awesome. It's a fun room. Yokov says, thanks, Jeremy, it was very interesting. You're welcome. Ida says, Jeremy, you gave an awesome presentation. You're a great teacher. Well, thank you, Ida. I appreciate that so much. It means a lot. Thank you. Let's see. Another question said, so a bullish gap and go has a black candle before the white candle, and bearish gap and go is a white candle before a black candle. Correct. Yes. That's right. Pam says, Jeremy, please tell us how to join your day trading class. Oh, you guys are pumped, huh? Yeah. All right. If you are watching this in a future life and you're like, man, I missed out on the free trial, our next free trial, true story, is going to be like June, July of 2016. We do not hold them very often, and here's why, if you guys are wondering. All of the education that Real Life Trading provides is free. If you go to reallifetrading.com, all of our articles, all our videos, all our education is free on Twitter, on YouTube, on Facebook. It's all 100% entirely cost $0. Nothing. Nada. Zilch. So we do charge for the trading room. So all the education is free, and I do that so that you guys know is trading right for you. If you find out, hey, it is, I want to join the room, go to reallifetrading.com, and you have the opportunity to join either the afternoon or the morning room. Dan will be sending you guys links along with the recording for those rooms after the, if you don't get a chance to get into the free trial. If you want the free trial, those links are in your chat pane. Click register. They are there. Splendid day. Splendid, splendid, splendid. Let's see. Good, gorgeous. Rich says, thanks, Jeremy. Very informative stuff. Thanks, man. I appreciate that. We have a few more minutes left. Any other questions out there? Right. It doesn't have to form. That is correct. Yep. So someone was asking, correction, bullish gap and goes a black candle followed by a gap up. White candle hasn't formed. It may not form. That is correct. Yep. Doesn't necessarily have to form that candle yet. The gap is what's really important. Dan, do you have any questions for me, man? Is there anything that you need? Does anyone else have any other questions for me? Any other stocks you guys want to look at while we're here? Wayne says, do you use Ninja Trader? Nope. TD says, confirmation says I'm up for review. Yep, we review everyone before they come into the room. I don't want any wild childs out there. So I recognize your name. We'll approve you, TD. We're very specific on who gets into that room because it's good, guys. It's solid. It's good. If you're wondering, am I bullish on Apple? The answer is no. Got it, Dan. Awesome. Carol says, what platform do I use for day trading or charting or what, Carol? Which one specifically? Another trader says, most overnight trading takes place abroad. Yes and no. A lot of overnight trading is international. Other companies or other traders buying and selling shares of whatever, Apple, Google, Yahoo. So yes, there's a lot of that. But really, most gaps overnight occur from news. So I'm sure a lot of you guys heard about the North Korea hydrogen bomb tests. Obviously, none of us here are fans of North Korea, and I'm pretty confident that no one here is listening in from North Korea because they don't have internet access. But, no, yeah, there's a hydrogen bomb going off, so cause the markets kind of go down. But, yes, most gaps happen after hours from news-related stories. Tim says, what percentage of your gap trades work? I'm a 50-50 trader, Tim. I win 50% of the time. Actually, since we're talking about it, I do have a worksheet that we provide for all of our subscribers and traders in real life trading, and we do track all of our results. Since February of 2014, here's our day trading results. And win-loss percentage in 2015, Tim, I was 43%, 195% ROI. So that's every single trade tracked with a chart, noted, notated, all that kind of good stuff. So I am 50-50, man. I am 50-50. So again, as I mentioned a little bit earlier, I'll just use this screen for a moment. If you're a 50-50 trader, and earlier I was mentioning good risk-reward principles, if you trade with a consistent amount of risk, say $100, and you take 10 trades and you're a 50-50 trader, so you lose $100 on 5 trades. Every time you lose $100. And let's say, just to make math easy, on the other trades you win double. Okay, it's not always the case, but let's for easy numbers it is. You win double. So if you risk 100, you lose 50% of the time. If you risk 100 and you make double that, okay, so this is a $500 loss. So that counts out half of that. So you have $500 gain being a 50-50 trader. I have one trader saying can't get the registration link to work. I'll try sending it again. So there you go. So it's in the chat pane. If you can't get it to work, you guys are welcome to email me. And really, you can email me anytime you have any questions ever. Jerremy@reallifetrading.com is my email address. You can find us on YouTube. I would love for you guys to subscribe to our YouTube channel. We post out free content on the reg. Like our Facebook page. Follow us on Twitter. We do all the social media stuff. Our mission at Real Life Trading is to enrich lives. And you guys have a great opportunity to be here with MarketFest and learn some really solid education from some amazing traders. And it really is just an honor to be on the same dais as some of the traders that have come before me and the guy that's going to come after me. So I just appreciate the opportunity of being here, folks. If you ever need anything, you can type in Real Life Trading into your browser. You can type in Jerremy Newsome into your browser. You can type in all of that. Carl says, how big was the ROI in 2014? Funny that you mentioned that, Carl. Real Life Trading has only been around for a year. I have been trading for 7 years and just decided to start a business a year ago. So I didn't really have an ROI in 2014. It's a very valid question, though. I'm excited to see what 2016 brings. So we track all of our trades. Here's our swing trade results that we've only been tracking since July. That's 42.5% return. And I do trade options. I'm a big options trader. I don't necessarily day trade options all that often, but I do love swing trading options. And if you're wondering, man, that's a really wide array of things that you do, Newsome. It's true. Here's our credit spread results, though. I honestly don't like showing this that much because it really scares some people. But we did very well in 2015 on our options trading, credit spreads, naked puts, bear calls, iron condors, bull puts, debits, all that kind of good stuff, 422%. And all of those are logged, all of them. So it's a big number, and I don't like to brag, but there it is. They're all logged since February, every single one of them. And this worksheet is, we do give this worksheet for those who subscribe. And there you guys go. You can click on the links, all that kind of good stuff. Chris says, love the credit spreads. Yes, Chris is an absolute credit spread legend, for sure. Carol says, options? Yep, options. Options. Well, ladies and gentlemen, that's my time. I really do hope to see you guys in the trading room. Either the morning or the afternoon. I would love to see you guys be a part of real life trading in any form or facet, and I absolutely hope that Dan brings me back at some point for MarketFest. This was a great experience. You guys have some great learning opportunities, and that's really what makes the market is education and diversity and the understanding of why we love this so much. It's an incredible opportunity, and I want to share it and educate as many people as possible. So again, thank you for the opportunity, ladies and gentlemen. Have an awesome day. And if you ever need anything else, again, feel free to email me, Jerremy@reallifetrading.com. I'll see you guys later.